Hello, friends. With all the volatility that we've experienced over the last few months and the expected volatility that we might see over the next few months, I thought it might be helpful to put together almost a 10-minute State of the Union to keep you apprised of our research and what we're seeing in the markets, and more specifically, how it might impact you. So this is going to be a little bit longer than most of the videos that we've put together for you. And just know you can always access those at adamschetwood.com/newsletter. But I'd like to structure this almost by breaking it down into three parts. I'm planning to talk for about 3 minutes on some of the positives that we're seeing in the economy right now. I want to talk for 3 minutes about some of the challenges that we're seeing in the economy right now. And then I want to talk for 3 minutes about some of the questions that we're wrestling with as a team, as we are being caretakers of your portfolios and financial dreams. So let's start with the positives, because there are plenty of positives to talk about in the economy right now. The first of which, probably the most obvious, is the significant recovery that we've seen in the markets since, late March, middle to late March. I think March 23rd was the bottom. And we've talked about how markets recover before economies do, because markets are always looking forward. And we actually explain this in detail in a video called Why We Don't Try to Time the Markets. So if you'd like more information on that, you can check our newsletter page and click on the video that says Why We Don't Try to Time the Markets. The second positive that I would see right now is that the Federal Reserve and central banks globally are being very accommodating right now. When you consider the $4 trillion in indirect stimulus and the $2 trillion of congressional stimulus, that is going to have an impact on the markets. There's a rule in our industry that you don't fight the Fed. The stimulus that they're providing is a tailwind for markets, and we should take advantage of that. Rick Adams, who many of you know and love, says it a different way. He says that the Federal Reserve, what they're doing right now by injecting so much liquidity into the markets, is almost the equivalent of spiking the punch. And when you think about the magnitude with which they're spiking the punch, it's going to have an effect. Both in the short term, that effect might feel very good, and in the long term, an effect that might not feel very good. And we'll get to that when we talk about some of the challenges coming up. The third positive that I want to just put a chart in front of you, this is from one of our research partners at JP Morgan, and it's going to show you that though the number of cases of coronavirus are rising significantly, we're seeing that mortality rates globally have declined significantly, according to the CDC and Johns Hopkins. So that's encouraging to us. And I'm not a virologist. I actually know some of our clients who are infectious disease doctors and researchers and ER docs. So we are thankful for you. We are praying for you. Thank you for everything you're doing. But we are encouraged as investors to know that I think at last count I saw that there are 13 vaccines that are in the human clinical stage trials, which is a really big deal. And what that does, what both of those lead us to believe, is it increases our confidence that this will pass. I don't know how, I don't know when, but I am very confident that at some point we will discover a viable treatment. And at that point, markets and homeschooling mothers everywhere will rejoice. So that is something that we have to look forward to. And those are just some of the positives that we see. Some of the challenges, COVID is the obvious one. Because there's so much that we still don't know about the virus. We don't know the long-term effects. Even for asymptomatic patients, we don't know how it will end, how bad it will get. We don't know, we just don't know that right now. And markets don't like uncertainty. So that's an obvious challenge. Second obvious challenge, and I'm going to put a chart up for this one as well, is that we as a nation are spending like it's going out of style. And as I said earlier, our deficit spending will have long-term consequences. Namely, the two easy ones to talk about are higher tax rates and potentially inflationary pressures that could lead to higher inflation. Right now, inflation is really not a big deal. It's not a threat. And we haven't really seen inflation in this country for a good while. The last time we saw a significant bout with inflation was the late 70s, early 80s. Many of you remember that. But when your purchasing power is eroding, it doesn't matter if your portfolio is not losing value. If it's losing purchasing power, that can be equally cancerous for portfolios. And so that is something that we're concerned about. So let me talk for the final little bit just around some questions that we're wrestling with as a team. The first of which is we're in such a painfully low interest rate environment. And for a lot of our clients who are retirees, how do retirees generate sufficient income with interest rates being so low without taking an unhealthy amount of risk? That's something that we're chewing on right now. Secondly, how do we hold in tension this need to keep the COVID spread manageable so as not to overrun hospitals? How do we balance that tension with the need to allow businesses to reopen, to keep people employed and feeding their families? Because as a short-term solution, we've kind of been throwing paper at this problem. But we can't do that forever. We need jobs. We need economic growth if we want to have sustainable human flourishing. So that's something that we're wrestling with and questioning right now. And the third really kind of comes back to this notion of how and when are we going to address the ballooning national debt. This is something that is somewhat especially frustrating for us as a team, because so much of what we do for clients is help them budget and balance those budgets and not spend more than what they bring in revenue. I mean, if you did that personally, if you consistently spent well above what your income was, you'd have to declare bankruptcy. If we did that as a business, we wouldn't be in business for very long. And yet, we've almost become desensitized as a nation that we can just spend what we want to spend. And there are two very real reasons why we can get away with that. This is worth saying. Again, being politically agnostic, what's so frustrating about it is that really neither political party has had the fortitude to address this in any substantial manner. So we can keep kicking the can down the road, if you will, and we can get away with that because we can print our own money at the end of the day. So there's no way that we as a nation can default on our debt if we can just keep printing dollars. But the bigger reason is that the US dollar is the de facto world currency right now, primarily because oil is denominated in dollars. So if you live in Albania and I live in Azerbaijan and we want to trade oil, then we have to convert our currency to US dollars in order to make that transaction. That creates this demand, this automatic demand for dollars. That has not always been the case and will not always be the case. The US dollar will not always be the world reserve currency. And when we make that change, that's going to create some challenges for us. We're going to have to address our spending problem. So again, how and when will we as a nation address our spending problem? So I want to land the plane here and just tell you that there are a lot of positives out there, and there are also a lot of questions and a lot of challenges that we see. And that is why we believe that the stress test, the portfolio stress test that we run for you is so valuable in order to achieving financial peace of mind. As a team, we would not be surprised to continue to see choppy waters for the rest of the year, or at least until some type of scalable treatment comes to fruition. And so again, if ever there was a time to review your financial plan and to recalibrate your allocations and savings targets around specific financial goals, now is a great time. And I want you to know that our whole team is available to you to review your plan and show you how our process is putting you in a position to achieve your goals. This has actually been really fun over the last few months, where we found that many clients have come to us with a lot of anxiety about the markets, and we'll walk them through their financial stress test, and they're able to see that they're still on track. And it provides them a lot of peace of mind, to focus on more important things. And honestly, y'all, that's what we want for you. We want to guide you to financial peace of mind. So we have a proven process to help guide you there by reducing risk in systematic ways and by integrating your financial plan with your portfolio. So if you have any questions or if you'd like to chat, we would love to hear how you're doing. So you could call us at any time, 919-287-5660, or you could go to our website and schedule a time online that works for you. I just want to say that we're very grateful for you, and we want you to stay safe, and I hope you have a wonderful day.